Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
All right, guys, welcome. May, how are you doing?
9/11. How sad, right?
Yeah.
Yeah, people forgot, I guess, but
I still remember exactly where I was that day.
me too.
when it came. I remember two things. When the space shuttle blew up, I was walking on campus at UT Austin. I know exactly the spot I was standing on. And when 9/11 happened, I was about to leave my neighborhood to go to my corporate job. And I just turned around. I didn't even get on the road to the highway. I turned around, went back to my house, and I just watched TV all day.
Yeah.
It was like so horrible.
Paralyzing, isn't it? It was so paralyzing. It's pretty horrible. Yeah. I was in the Sears Tower and we evacuated. And then I was working for the man, so to speak, broker dealers that you know. And I remember they sent a message that we should continue working because it was not a paid day off. And
Oh, hell no.
I swear to God, yeah, that was probably why, I've chosen other employment. But I think subsequently they probably have felt really stupid for that.
Yeah.
But I spent the rest of the day rescheduling meetings, strangely enough, and making sure people had rides because my coverage at that time was through all the Midwest. So it was a really weird. And then I just was in shock for like the next 24 hours. So,
I can imagine. I mean, it was bad enough watching it on TV. I can't even imagine being there.
Well, no, I was in the Sears Tower. So like
Chicago?
In Chicago, yeah. So the last plane, though, they say was headed there, but we were, we owe a lot.
I was thinking Empire State Building when you said
it's hard because your brain just kind of like crosses all the big.
I never lived up that way, May. I just visited. I've been to Chicago, New York twice for vacation. So
we've got some folks that remember when JFK was killed. Yeah, these big days and these big events. But we're here to keep it light. We're going to talk about GameStop.
Do you have a drink, May? We might need it to get through this.
Yes.
All right. It's almost gone. I'm halfway through my Corona, but I got another one on ice.
It's only Wednesday.
It's only Wednesday, but it's Friday somewhere.
Yeah, that's true. All
right. I'm going to, well, that's what I'm going with anyways.
It's somebody's Friday. Somebody only works certain days.
We got the GameStop second quarter results. And it's my fault for us being late tonight, guys, because I've been working on what was supposed to be my quick GameStop summary video, and I decided, everybody has a lot of questions on X, Y, and Z, so let me talk about that. Let me talk about that. Let me talk about that. Get all these questions knocked out for people that don't want to watch a live and hang out.
Yeah.
But I was having trouble getting it uploaded. Anyways, it just uploaded about 1 minute before we started. So if you don't want to hang out for live, that is an option. But we are here to just talk about this at a high level, to answer questions.
Hang out with us, guys. Seriously.
More importantly, May, I got the impression, this is why I reached out to you.
Yeah.
I saw you tweet about the GameStop earnings, and you and I haven't talked about this, but I got the impression from the tone of your tweet, you had more to say.
Oh, yeah. I feel like subsequently there's been a lot that's been published, but my initial reaction, I don't do much on GameStop because
I know.
Because, the thing is, first of all, he doesn't have a call, so there's nothing to really comment on if you take that and try to compare to financial statements, which is the style that I do, right? For you, it's a little different. For others, it's a little different. But for me, my style is to try to really try to articulate what I'm seeing in the financial statements, plus what management is saying they're strategically trying to do. That said, on all the meme stocks, because there's so much like fake news, there's so much really nasty, venomous ways that people talk about it, forgetting that a lot of people just put their money here and this is their investment. I do like to just monitor it to see. And I would say that the thing that I think I posted that kind of got taken in a crazy way is that this earnings report, especially in the context of the past few years of earnings reports, really doesn't show what I would have expected it to show by the third and fourth quarter, which is some sort of positioning ahead of the holiday season. The only thing it really seems to demonstrate is that he's continuing to pare the business down pretty aggressively. And like, it's almost like he's hollowing out the words I used that really I think ended up being quite triggering for some people is it really feels like he's hollowing out the company to make it a container for someone else to buy the container. And that can have some, if by itself, like if you have no other information, and so I'll give the other possible positives later, but if you have no other information, all things being equal, that's typically done in a way that's not necessarily fair to the folks that you're diluting as you're doing that asset raise. And the buyer might be really stoked about that. And you could, I mean, because it almost looks like I think the real term for it is it looks like it's trying to become a reverse merger container. That's what it looks like. Right. So reverse merger means that the company that you're buying actually is a better business. And for whatever reason, they want some of your assets. So they're willing to just merge with you, but somehow keep your brand, your name, or some reason why you're public and they are not public. So those are the major reasons why you do a reverse merger. Maybe there's others. And if I've forgotten them, feel free to put it in the comments. But that's what it looks like. Why does it look like that? Because you have the core business continuing to get smaller. You have inventory staying like, whereas it was flat last year, it's actually down versus last year going into the holiday season. Now, some of that is driven by whatever's going on in the gaming cycle. If I saw it correctly, I think I did, but there was something really awkward in the way that I was looking at it on my phone. And then you have this massive capital raise with the cash, but you don't have him deploying it right away. And then you have this new capital raise of 20 million shares also being filed as a shelf. Super cool. Don't know if they were out of room on their previous filings to do more, such that they just had to renew the shelf. But I'm not sure, given that you have all this cash, what it is you want the capital for. If you read the prospectus on the shelf filing, you'll see that the use of proceeds is really general, but they intonate in the use of proceeds, and they're very clear that it includes potential acquisitions for the purpose of, that are in line with what the company said it's going to do. Well, the crazy thing is the company hasn't said it's going to do anything. So I'm not really sure what that means. It is very standard verbiage. So it might just be that the banker was being lazy. Let's write it in and move on. But there's no stated use of proceeds. You have $4 billion in capital. You have no stated use of proceeds, but you have another shelf offering to raise a ton of equity capital. It's all really kind of strange, to be honest.
So let me just throw a couple things at you. Typically, they load up on inventory starting this quarter that they're in right now. So
like third quarter is usually most people. I mean, maybe fourth quarter, you'd see it like escalate. But right now, we're below the previous quarter's inventory.
Well, because they're cutting stores, May.
Yeah, no, they have been though this entire time.
So you would expect inventory to go down because you have a smaller footprint.
Okay, but let's look at inventory really quick. We're at.
I have it on the screen here.
Yeah. So how many stores did he eliminate?
Well, we don't know. They only tell us once a year in the 10K.
Okay. So previously I had seen maybe like a 10, 15, like 10% decrease in
I think it was 5%.
It was like small, right? 5-10% total.
I have it here, 5%.
Okay, sorry. So even worse than what I was saying, right? So unless they really got rid of a lot of stores, that's a big decrease in inventory, because if you'll remember, one of the things that I've watched for is inventory has decreased a little bit, but it hasn't like quarter over quarter. well, I mean, you expect a lot from holiday and then going forward, but like last time I remember, I thought it was weird that the inventory was flat. If I go back to last year, right? So let's just go the inventory lines.
Here's Q2 of last year. It was 676 million. And then at the end of Q3, which is the one they're in right now,
yeah,
it bumped up to $1 billion.
Yeah.
So, I mean, if you figure some store closures, 676 down to 560 would be in line. And then we'd expect to see a bigger number on the next earnings in 3 months.
So, okay. So Q4, 682 to 632. So what's the decline? What's the number? 676 to 560. See, I would have expected something with a 6 handle still.
Okay.
So, okay. But if you want to do it that way, then we can do Q1, 756 to 675, right? So that's a 10% decrease. So are you saying that you think it's about 10% stores change?
There was a footnote in, I don't know. I mean, I have no way of knowing how many they are closing other than I did spot a footnote that is new in this 10Q. In fact, let me just pull it up. We can look at it together because I haven't seen anybody talking about this, and I actually forgot to mention it on my video. I had so much stuff that I wanted to cover. This one, we have initiated a comprehensive store portfolio optimization review. And it says, we anticipate that it may result in the closure of a larger number of stores than we have closed in the past few years.
Okay, so yeah.
And there's going to be an impact to SG&A in the short term.
Yeah, so wind down. So what I'm saying, so there's a couple different ways that a person could do this, right? You can have let's say, let's just calculate the percentage really quickly from that previous slide on inventory decline. So 676, it's like, so it's like almost 20%. Is that right?
What are you looking at? 759 to 676?
Are we comparing Q2 2025, Q2 2024?
I don't know which one you're comparing. That's what I'm asking.
So the inventory decline is about 116 million.
If you're looking year over year, yeah.
Yeah. So the year, because there's definitely seasonality. So you've got almost 18 and change percent, almost 19% decline in inventory.
Seems like a lot for a 5% store reduction, doesn't it?
Yeah, that's my issue. Yeah, but so if we're optimizing too, the other thing that you'd often see is you'd see lower store count, but you would see inventory still in line. So optimizing would mean you get rid of the stores that aren't selling as much and you put their inventory in a better store. So I mean, like, unless the store decline is something like literally in line with this, I mean, it'd have to be actually it would have to be closer to 20%, right? Because if it was only 7, let's say that's 18 and change. We'll use 18. Okay. Somebody else can put the math in the comments or something and just be my savior on that. So like 676 divided by 560, I think is the number, right? So if the inventory decline is 18% and the reduction in stores is 18%, it's not very much of an optimization. You know what I mean? So like really it should be, because technically the stores that are remaining should be selling more per store unit, right?
You would think. That's what the GameStop YouTubers tell us. This is great that they're closing stores because the ones that are remaining are going to sell more because now you don't have another one right across the street.
Yeah. And that's possibly true. We don't know the answer because he didn't publish a number. So it really depends, but it looks so number one, on the next earnings release, you'll need to see what exactly is the reduction in inventory versus the reduction in stores. So if they reduce stores by like 25% and inventory only went down by 18%, then what they actually did was increase inventory per store, and we need to see the sales through, right? If it's some other mix of that, you're missing a pretty vital piece of information. But ignoring all of that, your inventory reduction is really high. So like how many stores did you get rid of? It's not, it begs the question. And
that's why it'd be nice to have some comments from management on any of this stuff, right?
Yeah. So short of having better information, it kind of looks like he's just still gutting the company after all these years. Now, if you look at like everybody always wants to compare to AMC and they're like, well, AMC sucks, blah, blah, blah. But largely speaking, the decreases in theater count, the biggest delta on that, the biggest change in that has already happened. And then what's happening right now is just roll off of contracts that are ending peacefully and gently. Do you know what I mean? Like you're not really seeing this massive decline with massive.
Well, AMC's reducing theater count by 10%, but revenue is growing, and we got
here's that too, right?
We got an opposite problem here. They're reducing stores because sales are falling, and sales are falling because they're reducing stores. And where's the safe landing?
But the theater count isn't down 10% this year.
I'm talking about since 2019.
Oh, sorry. Yeah. Okay. 10% since 2019 is like, okay, I get it. Nice, chill, slow. We're trying to keep the business approximately the same. You have you're showing first of all, you're showing a massive decline in revenue, right? Okay, cool. But you're also showing a massive decline in inventory. So I have to actually really understand what got sold. You know what I'm saying? What exactly happened? That's all. If it was a smaller number,
all right. Yeah. Let me throw something at you for the people that are probably yelling at their screen. But May, you don't understand. They know they're overstored, and they know they need to reduce the store footprint, and that's part of the plan because they're going to pivot into omni-channel selling on the web, blah, 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 blah. And maybe do something else, maybe acquire somebody in their segment with that $4 billion. So maybe this is part of the plan to wind down the core business a little bit, maybe not to hollow it out for a reverse merger. How would you react to that type of debate question?
Okay, so anything is possible, but with the market cap's $9 billion, is that right?
I think 8 with 8 billion. Just under 9. Yeah.
Okay, so let's call it 9. You have $4.5 billion.
I have it here. Hang on.
Yeah.
We can just look. 8.8.
Okay, so we'll call it 9 to keep it simple. So 8, even though 8.8 is a luckier number, to be honest. So the Asian in me wants to go with 8.8. I know. Right? So 8.8 billion. All right, we're gonna go with that because it's such a lucky number. 88, right? Okay, so 8.8 billion. 4.5 billion in cash. They're going to do an acquisition. That's why I'm saying it looks more like a reverse merger than it does, because you're basically your enterprise value for the company right now is going to be your market cap minus the cash. So your actual core business is not actually that big. So that's why I'm saying like you're becoming a shell and you'd have to back something into it, most likely. And it's going to be, let's say it's an all cash deal. Okay. Right. Because if you use stock right now, then that's not going to go well for equity investors. And it won't go well for equity investors because the only thing you'd be able to use is some multiple on the fact you'd have to remove the cash. So you get almost nothing for the cash.
All right, but then why would he do that? Because his job, the board's job, is to get the best deal possible for shareholders, whether it's a reverse merger or acquiring someone else and just growing the company again, figuring out a way to grow earnings. Why would they consider a reverse merger if that is going to be detrimental to shareholders?
So here's the thing. So I've got some people, they're simplifying what they sell. They're all this stuff. No. 4.5 billion capital raise doesn't explain any of that. Actually, if all they were doing was simplifying the core business, you would see massive EBITDA increase, earnings before interest, tax, depreciation, amortization is what EBITDA stands for. Or you can just look at operating cash flow, subtract out CapEx. Okay. You would need to see that number like jacked up high, but he's actually not trying to jack up free cash flow because all he's doing is paying down his accrueds like crazy. Okay. So if I saw him stop doing that, generating a bunch of cash and still selling stuff off, then I might be, okay, okay, that whole thing which you just described, which is selling more clothes and TV or whatever, that would make sense. That would be that's what that corporate, if you're like, hey, if what you're trying to do is consolidate, reduce, and whatever, that's what that looks like when you look at financial statements. This looks like someone has told him that they're going to essentially wind down massively the core business and use the capital to become something totally different. So examples of that would be like Corning, ticker GLW. Back in the day, that company made glass. Okay.
Right. Yep.
Now it makes very, very high-end glass technology for whatever. And it might have looked like this, right? Other companies that have done it, let me try to think of one that's more in recent history, because that happened so long ago, it's not even funny, with that transition. Oh, what looks like that now, or that has done that now? Oh my gosh, I'll think of it.
Let me know, because you remember far more of this stuff than I do. Like, I wasn't paying attention to that stuff back in my younger days. I was doing my corporate job. So
yeah,
that's why I appreciate you, whether you end up being right or not, just having the discussion so that we could either learn or maybe you'll end up being right. And that'd be pretty cool, if you figured something out before everybody else.
Well, okay. So like, if you're going to do this, if it was the case, like if it was the case that there was a possibility for what's called a roll-up strategy, it might look like this. Okay. But there's no other real competitor to GameStop that's doing specifically that type of stores. So that wouldn't make sense. Like if you were a healthcare company and you were doing something like home care, something like that, right? Where you do senior care, but they call you and you bring, senior care in-house. It's called the home care business, right? Like, let's say you're doing that and you raised a ton of capital, then very clearly it would look like this, and you would not be like doing any capital expenditure. And then I would expect a series of acquisition announcements. But the thing that makes that a little bit awkward is that I would already see the core business set up to be attached to other acquisitions. And I don't see that yet. Now, maybe I just don't know, and it's totally okay. I'm not saying them in the end all be all. I'm just really trying to add the little value that I can add is looking at this and telling you what it would mean if you just gave it to someone, took off the name, and said, May, what is this company trying to do? This is what I would think it would potentially, this is the question to ask. Yeah.
May, I'm sure you saw that accounts payable is, getting whittled down. Right. Yeah. I'm sure you saw CapEx was almost non-existent. These are kind of like strange things that stood out to me.
Yeah, exactly.
And people are going to say, well, of course they're whittling it down. Why would you want a big accounts payable? But we look at trends, right? And it's accounts payables dropped from $1 billion to 220 million in a couple of years.
Oh, this is so funny. I love this IP and Kevin. Yeah. So like that, those two things are part of why I'm like, he's hollowing out the company. Because if you're not even, so like you would expect in a typical, like, I'm going to optimize, even if you use something like AMC, which everybody's like, you're just talking about, no, if you look at AMC, the CapEx numbers were really big when they did actually attempt something somewhat close to this strategy, but not in this particular approach, right? They definitely were trying to do a roll up in 2018 when they did the debt raise, because they were trying to do with debt because debt was so cheap at the time. And when they did that, the first thing you saw was a massive CapEx. Now they went and acquired a bunch of theaters because they were trying to just roll up within the same industry. But that's my point. Like if I saw something in CapEx, I'd be like, oh, clearly they're like really doing something. They're orienting themselves to start to do something very different.
All right.
The only business that this amount of CapEx would let you do is become a private equity shop.
But
like the only thing.
Explain this CapEx thing, because that was my first question when you mentioned that on Twitter the other day. All right, I don't get it, May. Pretend I'm dumb. I am dumb.
You're not dumb. It's
I don't understand. You obviously know something. You're trying to explain something, but I'm not getting it. Why would you see CapEx increase if they're planning something?
Okay, so let's explain the opposite, right? So if you were really just trying to optimize your existing stores, if that's really the only thing you were doing, then you would be reinvesting in your existing stores, and then you would be selling off the other stores, and I would see a very specific cash flow usage from the sale of stores.
Right.
Instead, I don't see that. What I see is you are not reinvesting anything in your existing stores to upgrade them, change them, or otherwise improve them. And you're definitely selling off the other stores, and then you're just keeping the cash.
When I saw the CapEx number, I was like, good Lord, these poor employees, like what kind of work environment must that be? Like, oh, I got a maintenance request, but nobody will answer it because they don't have any budget for CapEx.
It's
That's what it feels like to me.
Yeah.
I mean,
that like either that or they had a budget, but they just decided not to spend it. That's possible too. Okay, so that's the first thing, and I was like, okay, that's weird. So then, what could you be using the capital for? So really, when you see a low capex number and you don't see the spend in other places, you're like, the business is identical. So you're not optimizing in the sense of improving the existing stores. You're optimizing, meaning you're just getting rid of stores. That's not really optimizing. That's really just removing. Do you know what I mean?
yeah.
Optimizing actually applies increasing, doing something new at the existing store. So it could be like figuring out a new way to sell to people, and you would see some capex maybe there. It would be like doing a big build out in technology that somehow helps you. You know, it could be like there's a bunch of things that it could be that should show up as a use of cash as a part of your free cash flow usage, right? And then what was the other thing that was the question? Oh,
yeah. Well, that was the question. Like, why would you expect to see capex going up to set them up for acquisition?
It would at least tell you what approximately they were trying to do, right? So if they were trying to optimize the stores, like make them nice so they could sell them, you would see capex. If they were trying to transition the stores to something new and innovative, you would see capex.
Well, maybe they haven't figured out. That's it. People were saying they're taking their time, May. They're just waiting for the economy to crash and everything to go on sale cheap, and then they'll buy whatever competitor or cherry that they got their eye on. They'll buy it when it's cheap, when the market crashes.
It's a really valid point, except what are the competitors? Is there a GameStop competitor?
I just said competitor. There's not really one, but let's just say it's a gaming company, software company. I'm just making up examples.
Maybe they could buy Toys R Us out of Macy's. I'm sure Macy's would send them, but it's only a brand at this point. Macy's is the one that ups the inventory, and it's all the individual. So then the other thing that this might look like is if they were really transitioning like completely out of retail into something else, So
well, that is what some people have postulated, is that they're trying to really ramp down retail and just become a online store.
No, this is not even an online store because you'd still see the capex.
Right. See how that all circles back. Now we got to answer your question, because you'd expect to see some capex to show that they're starting to really invest in building out the online store, right? Wouldn't you see something?
Right? Like you'd see something. I mean, unless this is a really cheap build out, because we're talking about like $3 million. Is that it?
A year ago, May, the capex was 10 million. We're talking a reduction from 10 to 3 in 12 months.
Okay, so maybe they built it all, but then is what you've seen in the last year so amazing on the 10 million spend that you feel like they should be winding down the spend?
I don't know. I mean, I occasionally go on Reddit and I read on the GameStop Reddit channel where employees post. And I mean, I don't check it every day, but I see a lot of complaints from them that management is inattentive or they can't get stuff fixed. There's some of them that are happy. It's probably like, any company. If you're in a location that's already targeted for shutting down, they're not going to pay you much attention.
Yeah.
But if you're in a good profitable location, you're probably getting the attention.
Yeah. So then Steam, somebody's posting that Steam would be the closest competitor. If Steam suddenly wanted all of the real estate operating leases, And they had some massive thing that they wanted to do.
Steam would not want real estate.
I know, it's so weird. I can't see them wanting real estate, but let's say they did. Okay, so just to give you an example of what's the cash all about? If they wanted to buy whatever was left and then use the cash for renovations and to pay down their own massive debt because somehow Steam, which is crazy profitable, somehow mad some crazy, maybe, but that's how weird it would be, right? Like they would have to, alternatively, because gaming does have a lot of like very weird structure as relates to venture capital and how gaming gets funded. It's possible, I mean, it to me, like if I had to put odds at this point, I'd probably put 20% odds, but it's not zero that they were going to become a VC for gaming. That is like 20% odds is the best I'm going to give you on that, right? At this point, because I'd really need to see an announcement because
I think that is like a lot of people's leading theory. Like they're probably given 80% odds for that.
Okay. But the reason that like you would see staffing changes at a minimum and they would be announced in press releases.
But they're saying they're still figuring it out, May. They haven't figured out what they're doing yet. They're taking their time.
Yeah, well, okay.
Let the man cook, May. I'm just telling you what I see on social media. Leave Ryan alone. Don't rush him. Why are you trying to rush him, May? He just got this money 2 months ago.
My favorite thing in the world is how people express themselves on the internet.
I think that's a fair question. Like I'm gonna be the voice of the retail trader. Are your expectations too unrealistic? If he just got the money in June to expect that by August he's already got a plan?
Yeah, actually, you should have the plan before you ask for the money. That's usually, and like he's in a very unique circumstance where people are willing to give him the money, even though he hasn't announced a plan. Okay, so if you look in the prospectus, it's usually amazing. The first section, and this is the section that is used to then sue a company, is actually this section called use of proceeds. So you're supposed to actually tell people what you're using the money for. In this case, it's like this amazing thing that he has magical power with. The other person that had this magical power was Elon Musk, but Elon Musk was very clear on what he was using the money for. Okay. So even though I saw some people on the internet being like, well, Tesla raised a bunch of capital, is amazing, blah, blah, blah. Guess what? Elon was really loud and very articulate about what he wanted the money for. So that would be the one major difference between GameStop and usually you have to tell people. So here the use of proceeds is so general. It's just that I can acquire stuff, which really from a shareholder perspective leaves you to really, you got to really love Ryan, and people do in fact really love Ryan, and people really do believe him, and he has a history of success. So so I'm really sensitive to saying anything negative, but I would say, you can't sue him if he uses it on something crazy because the use of proceeds is just in line with whether a GameStop, conceptually would make sense for us.
I'm one of those people, May. I'm one of those crazy people that is going to give my full faith to Ryan Cohen, but my investment in GameStop is, it's very small. So it doesn't matter to me what he does. I'm not one of these people that has 20 or 50 or 100,000 invested in GameStop where they're really, everything is riding on Ryan steering this ship properly through the channel. But I'm not a Ryan Cohen hater. I think he's a very smart guy.
I mean, can we do the fun conversation about what AMC and really give it credit, like really try to AMC being bought by GameStop? Because I
saw that comment. I was hesitant to read it, but you went there. Mad Ride says, wait,
you gotta give love to those people because they were on my post as well. And I'm like, all right, we
got two comments. One said, what about AMC and GameStop merging? That's not on my short list of things that are ever going to happen, but I know a lot of people think that it would be a good idea. I don't really see what the synergy is there other than they're both meme stocks, but like company to company, I don't know. Some people say, well, AMC could use part of its lobby to build out a little GameStop shop, but I don't know that there's enough square footage available in most AMC lobbies to meet GameStop's needs.
Yeah, I mean, if you were going to do it, but if we were, okay, so let's say for whatever reason, Adam Aaron, who has expressed no ambition in this direction, and Ryan Cohen, who never says a word anyways, decided, I don't know, they just decided to hang out at a meme convention. And just were like, we're going to, let's
blow their socks off.
Blow their socks off. Let's do it. Okay. So what would it actually look like? Would it be insane? I don't know the answer to that. I would say a few things would be helpful to AMC for sure, because the 4.5 would definitely take care of the capital load.
Did you notice, May? Did you notice? I don't know if you saw my tweet. GameStop's cash exactly equals AMC's long-term debt.
I know.
Is that a coincidence? Ryan, coincidence?
To me, it's as coincidental
I
know.
I'm just teasing. It's a coincidence.
You know, they're going around saying that Neo in the Matrix, his passport said 9/11 on it. I think it's probably in that category. But okay, let's just say that it would it help AMC as far as the cash component? Yeah. As far as what would then happen next? I mean, I would lean towards you'd really have to be aggressively stretching, right? So Ryan Cohen, the GameStop does have at least some kind of more extensive online shop, right? So AMC still hasn't built that out and would eventually have to create a Shopify for that manages more swag from the movies, okay? That would be, but that could just be done by a licensing agreement. That doesn't have to be done by entering a totally totally separate new business that doesn't necessarily, would AMC get more distribution? I don't think GameStop has enough online gaming presence in the sense that relative to something like Steam, then yeah, you've got the potential to just deliver movies on a game console, then maybe. Super long shot, super not the core business of theaters, but would technically at least have the word distribution in it. I'm trying so hard, it would be awkward. It would be awkward. I'm never going to say no.
Yeah, I'm not going to say never. It's just not a topic you're going to hear me talking about.
It would be awkward.
How about Mad Ride says, what are your thoughts on Ryan's dilution on GameStop in comparison to Adams on AMC? I'm going to go first on this one, May, and then I'll let you throw in whatever comments you have. Both they're very different companies, right? GameStop was allowed to stay open during COVID. They had minimal income impact, and they had much smaller debt load going into COVID. AMC had a high debt load that was dependent on a constant revenue stream, which got cut almost to zero. And then they're dependent on the movie industry, which takes years to get restarted, versus GameStop, you're just waiting on stuff to be unloaded from a ship. So different businesses. Adam and the AMC team, I think, knew that they were facing multi-years of liquidity crisis and net income losses, huge ones, 250 million a quarter. And so it was a necessity for AMC to raise cash, or they would have filed for bankruptcy. And they chose the fight path. They could have just said, well, sorry, guys, we can't raise $2 billion. We can't raise $3 billion. So we're just going to call it a day, give the company to the creditors. They chose the fight plan. And it was unfortunate if you held all the way through it as a common stockholder, right? But yeah, I mean, they communicated it very clearly. Adam talked about the struggles, and it was in every 10Q and in the risk factors. It was very clearly communicated dilution, I think.
Yeah.
Versus, he talked about it in every call, how the industry is struggling. Sometimes he'd say, oh, well, it's looking really good, but we're still struggling. And people get mad at him for doing that. Like, why are you rug pulling us? Just say it's good. Because he wants you to know they're going to need to raise money. He's trying to be as real as he can with you.
Yeah.
Then on the other hand, we go to Ryan Cohen out of the blue, right? He just raises money out of the blue 3 times now since May. If we count the one from yesterday. And why does he keep doing it? That we don't know, because he doesn't communicate.
Yeah.
So that's my thoughts. I mean, I think I trust all CEOs to raise money for a purpose. Adam had a purpose. It was very well communicated in company documentation, tweets, meetings, the struggles of the industry and the company. Ryan, on the other hand, I think he has a plan. I don't know what it is. Maybe May's idea is correct. Maybe it's something else, but it's not very well communicated. So how do we judge if he's doing the right thing or not? We don't have any idea. They clearly don't need the cash from another 20 million shares based on what we know, which is we don't know anything. Go ahead, May.
No, totally. I mean, use of proceeds is everything in a capital raise. And then if you want to go to the balance sheet or the 8K, I have it up. Do you mind if I share screen real quick?
Yeah, go ahead.
All right. Share this one. So if you look at this balance sheet, August 3rd, then you've got total assets of 5.5 billion. You've got total liabilities of 1.5152, right?
Yep.
So like, I mean, I got to ask, are you trying to turn this into a private equity company? I don't know what you're doing. Do you know what I mean? Like you haven't upgraded the stores. You're just selling them all off, this time at potentially you've sold at least 20% of the stores, right? You could care less about any cash flow that's being generated. All it's doing, it's going back to pay your accrueds, right? Here's the cash flow statement. It's really the accrueds that are getting paid, right?
Yep.
You know, you upped inventory a little bit from last year, but you're so low on inventory relative, you know what I mean? So like this, you know, this would be beautiful if somebody on your board was like, you know what, Ryan, you have like beautiful ability to raise capital in a way that I've never seen. I don't have to pay fees on it. I don't have to like, you know, because like let's say you were an asset manager, right? You got to go out, you got to beg people for money, then you got to pay fees and you got to negotiate those fees. You keep 2%, 20%. It's not permanent capital. They can still pull the money from you, right? They can still pull the money from you. Here, this is permanent capital. Like the shareholders gave him $4 billion in cash. You know, do you have any idea how hard it is to raise $4.5 billion of cash? It is so hard. A hedge fund might work for like a decade, try to get his track record. And it's still the case. You would not, okay, like it's a phenomenal amount of money. So like if you're, let's say like somebody on the board, what he really wanted in life was to create a private equity fund with some kind of very loosey-goosey gaming vision. That would be like, that would make sense to me. I would be like, yep.
What if he's just going to become a VC company or a hedge fund? Not a hedge fund, maybe that's not the right word, but what if the intent is we'll have a small, tiny gaming presence, maybe an online store, but we're gonna pick up and coming companies or Bitcoin or whatever and just invest money and just kick back on the beach.
Yeah. And then
could he be doing something like that? And we're going to make everybody rich with just our excellent capital gains and income plan.
Yeah. Okay. So whereas I gave the other thing like 20%, this one I would actually give closer to 35% probability.
Yeah. I mean,
25% probability. I'll give it like if I'm just like randomly throwing a dart at the probability board.
Okay. I mean, there's a lot of people that think that that's what he's lining up to do. Just invest that money in something, become, what is it? MicroStrategy, where they just invested in Bitcoin. Like, yeah. What's wrong with that? What's wrong with that if he's going to do something like that, other than you're gambling with people's money?
It's just whether or not people understood that's what they were, because the use of proceeds. So that's why the use of proceeds is so irrelevant, because the use of proceeds is so loosely written right now, you know, especially since he's literally said nothing on any of the calls about what the future strategy is. So he literally could do anything and just be like, yeah, no, that's always been my master plan. And he's raised this beautiful capital. You know, the stock, even though it took a little bit of a hit, didn't take a massive hit. as relates to the announcement of the capital raise, you know, but it does look like he's gutting the core part of the business and doing my 35% probability goes to that. And unless I get more detail from him.
All right. So we talked about, a lot of people don't want anyone asking questions, like just leave Ryan alone, let him figure it out. That's one talking point out there.
Oh,
he needs time. He needs time. Your thought is he probably should have had a plan before he raised the money. But what if the Roaring Kitty thing was just a complete surprise, and he's like, well, we should jump on this and we'll figure out a plan for the money later? Is that a possibility?
Well, that's why I'm giving 35% odds to the fact that some board member was like, you know what we're really good at? We're really good at raising capital at 0% interest rates. That's what we're really good at, which is a cool thing. I mean, that's what Elon's good at, to be honest.
Hey, what do you say to the talking point? And I'm hearing this from numerous people and seeing it on Twitter and everything else. The dilution's good. You're not actually being diluted because your book value is increasing. Your book value increased from $4 to $10. Therefore, this was a good thing. You're getting ahead as a shareholder with this dilution. Tell me, how would you react to that? Because I know how I reacted.
I mean, you own less of the company, so I'd have to do the numbers, because usually that your book value should not. It shouldn't increase that much anyways, because
if you went from 300 million shares to 420 and book value went from $4 to $10.
Yeah, it is good. I agree. That's why I'm saying like 35% probability goes to the fact that he's a great asset raiser.
Is it good for shareholders that got diluted and didn't buy more shares to maintain their ownership of the company, though?
It depends what he does with the cash. Hold on. I probably should, let me really, so that you guys really know that I like kind heart when it comes to GameStop, and the fact that I would love for you guys to like make your money back. He is really talented at raising capital for nothing. I don't think people really appreciate how there are in history, there have been very few people that can do this. And the value of that is potentially infinite if we look at Tesla. Do you know what I mean? And we don't have to just look at Tesla. Like, Elon is a money-raising machine. He has decided to do a few things with it. But all of those businesses started with nothing and became something. Like, that's the beauty of the cap. That's what this is the unspoken amazing thing about the capital markets. It is the unspoken amazing thing about America. It is the unspoken amazing thing about the whole financial system, is that you can take nothing and turn it into something, okay? But one key role in that, and it's so vital and so precious that we have a whole industry called the financial industry surrounding it, is the ability to command that capital, to get it to come to you. The asset managers, even the ETFs who have collected so much money, they still have all this extra liability if they don't follow the massive amount of regulation on top of it. They still get fees from you associated with it. In some cases, they're very small if it's like a big ETF. They still have all this thing. Ryan, when you give him the money from an equity capital raise, he owes you nothing at that point. Okay, he owes you nothing. And that can be really scary, for sure, right? For sure. If he's an evil human being, let me say it this way to keep it simple. If he's evil, your stuff goes to zero. He literally took your money, and you have some ways to sue, and we'll see. But if he's actually a good human being, let's go ahead and give him the benefit of the doubt. And then he does something with it of value, such as become like a venture capital fund that has now raised $4.5 billion in cash.
That's funny, because someone posted that exact comment. We were talking about GameStop, and I was like, we're really just betting on Ryan at this point. And someone said, if he's a piece of shit, we're going to zero. But if he's a genius, it's gonna end up pretty good. And that's kind of how I look at GameStop. Like, I can't look at the balance sheet and tell you what the stock price is worth. the stock price is worth whatever Ryan does with the money, and nobody knows. So I guess my message to anybody talking about GameStop is, if you want to be positive on GameStop, I'm right there with you. I'm positive on Ryan Cohen. But when you put price targets out there, like, well, based on the balance sheet, this stock right today is worth $50. It's just not. But it might be, if he does something with the money, it might be worth 50 or it might be worth more.
You gotta know what it is at this point. So if you've been in it, I don't know what to tell you. It depends where you bought it at, and it depends what kind of risk and what kind of time horizon you have. If you're new to it, if it does get clobbered like crazy, such that it's in well, definitely if it's like in single digits or something insane, if it trades like anywhere close to just the cash, you got a shot. As it closes in on yeah. But
we're over 2x cash right now, May.
Yeah. I mean, all the other stuff about pretending like this was an amazing quarter, I get it. I know why you guys are saying it. I know why some people got really triggered by my post. Sorry about that, because that wasn't my intention to trigger.
I know you don't ever intend to trigger people. You're just sharing your thoughts.
I know. I'm sorry. but like all that stuff is, I mean, like it would be like if you were, like, let's say Google has some small business that sells ice cream. Do you know what I mean? You're looking at the wrong part of the balance sheet at that point. The 4.5 billion is what you need to try to understand. You know what I mean? At this point, the rest of what's going on in gaming looks like, and is very clearly stated, to be winding down. That is not going to be the future of GameStop. And in the weird turn of events that you just don't get to see very often, you have a guy with $4.5 billion of cash that clearly is making that what the future of the company is, and has said nothing. It's amazing, Yeah.
Well, I'm going to give him the benefit of the doubt, May. I for the moment, trust Ryan Cohen, and I have a lot of faith in him. I'm just being one of those guys, and I've been very clear about this with my audience, and some of the GameStop people hate me for it. Let me get rid of this screen.
She would tell
I'm one of those guys that if I'm going to take that gamble on Ryan, which I'm willing to do, I want the cheapest entry on this stock that I can get.
I know, that's how I'm doing it too. That's like, it's definitely on my radar.
I don't know why that's such an offensive comment to people. Like, you're okay, you're willing to pay 25 or 30 for it. I'm not. That's just my trading style. My risk tolerance is not at a $25 or $30 level.
Yeah,
I don't mind paying. I bought some today at $19.50. That's I'd prefer to pay 17 or 12, but I don't know that it's going to go down there again. So, $19.50 felt okay today. We'll see what it does tomorrow. Could go lower. Depends on, we got PPI, we got the Fed meeting next week. There's a lot of variables besides just GameStop at play. So I don't just look at GameStop. I'm looking like whole macro. But I mean, if I'm going to gamble, I feel like I'm just, flipping a coin. Ryan, good guy. Ryan, piece of shit. I think he's a good guy. I think it's going to land on heads. Heads, he's a good guy. But I still, for my own safety, want the best, cheapest, safest entry possible.
Yeah. I mean, if you look at so the way that I would interpret the revenue, because a lot of people were like, but the net income is so much higher. So the revenue went from, was it like 1.5? It was almost 30% down. Did I get it right? 31%. Wow. I thought I was like losing memory. Good job. Okay. So 31. So you have a reduction of 30. So that's why I'm saying, did he possibly reduce stores by 31%? Like it is what we're seeing. Like what exactly was the store reduction? And if so,
yeah, we don't know. See the red 30, see the red 31. That's the revenue growth rate year over year.
Yeah. So that's why I'm saying, like, really whatever's left is really mostly cash relative to what the business, because you could pretend like, oh, market cap before they added the 4 billion cash was this. So the company's actually valued at this without the cash. And that's the core stub business. But since there's been no growth and all the other stuff is very confusing, I'm going to say, no, you can't. It's really what it is, because clearly there's been so much change in stores from last year that whatever was going on before the capital raises is nothing like what's left over. What's left over is significantly smaller. Yeah, so it's really the cash right now. Ryan, if you're watching this, I can't wait to hear what you're going to do. To be honest, I'm really excited to hear it. Like, I think we're all going to be pleasantly surprised. I'm rooting for you, my friend. Do you know? But yeah.
Let's see what else. Get Rex says Cinemark hit a 52-week high and AMC won't move. It's frustrating. Yeah, I don't really want to talk about movie industry tonight because we're trying to stay focused on GameStop. But I've done a Cinemark earnings video. I'd recommend that you go watch that. And I'm just going to say one's profitable, one is providing forward guidance for increased positive earnings, increased free cash flow, and potential share buybacks, and the other is still trying to fix the balance sheet. So just recognize them for what they are, and you're going to have to be patient on AMC. Yeah. If the box office grows, some of the problems it has will get fixed, but they're not in the same part of the race right now. One's ahead half a lap.
That's fair.
Same with IMAX. IMAX and Cinemark are in an enviable position, and AMC's still playing catch up because they have a larger footprint. But that's all I'm going to say. I don't want to go off on a tangent. I'm happy to talk about it any other night.
A different video at some other time. When they won't report probably until November, though. Usually that's when they report. So
AMC?
Yeah.
Yeah.
We're late, right?
November will be the next one.
Yeah. So we got a while between then and now. Hopefully we get some really exciting.
I'm expecting a profit for Q3 if we get over 2.45 billion domestic box, which I think we're easily going to get. So
yeah, there's some good.
Go see a movie. Kevin says he bought some GameStop today under $20. Booyah, Kevin.
Nice job. I mean, hopefully we don't know, but I'm rooting for you. I really am.
I said in my Discord when I bought it, I don't give anybody instructions in the Discord. I just say what I'm doing, just like I do on camera, but I don't make that many videos. So my Discord is like, hey, for those of you that care, because you're here in the Discord, here's what I'm doing. I said I'm buying at 1950, but I'm not going all in because there's a potential for a lot of reasons, not just GameStop related, that we could go down. And I'd much rather buy at 18 or 17 or 16 if the market has a little dippity dip. You know, yeah. Nothing of GameStop's fault.
Yeah. I definitely have my radar screen, and now I know what you guys are all buying it at. I may actually dip my little toes in because I was trying to figure out where to dip my little toe to start out. I'll put it in. It'll be small just so I can play along.
Get Rex says that is all he can do is close down stores and show a profit. Once that's done, there's nothing to do but merge or sell.
He's not selling because he has so much cash. If he were to sell, it would be bad for shareholders. I mean, okay, look, you can structure sales a lot of different ways, so I should give you that caveat. But most of the normal ways that you would do it, like, you know, because imagine if you have $4.5 billion of cash, such that the old business is worth less than that cash, then somebody that's buying you is buying that cash, and they're not going to give you a multiple on it. But right now, the stock has a multiple on that cash. So basically, if he does that, then he asset raised for someone else to buy cash from you. It's like, it's not usually the ideal thing for shareholders. Now, can it be negotiated? Can someone do something really exciting? Yeah, banking is crazy, and people that are really good at structuring stuff have like all kinds of creativity that is beyond me. But what you really want is for him to acquire stuff, not.
I'm going to guess, and let me know in the chat, but get wrecked. I'm going to guess that you're commenting as a non-GameStop shareholder, because I see that on some of the forums. You know, people. And I don't care, guys. I don't care whether you like GameStop or not. I only have a very tiny position that I bought today, and I only swing trade GameStop for the last couple of years. So no one's going to hurt my feelings in this chat. But people are saying, the ones that are negative on GameStop, Well, the only way this is going to end is he's going to close it down or sell it. But and like you pointed out, May, if he sold it right now, the price is at a premium 2x cash. That's not going to work out well for shareholders, most likely. So let's not talk about that scenario. It would not be optimal. What the most optimal scenario? I keep coming back to, what can he do to benefit shareholders? He could acquire something or invest the money into some venture or some security or asset that throws off more than 4%, which is what he's stuck with now, 4 or 5%. Because even earning 4 or 5%, it's still trading at 2x, maybe 1.5x what the company's worth.
the most of the earnings is coming from like a bond, essentially.
Right.
That's why.
I mean, I figured at 4 or 5% on 4 billion with a 25 multiple, the company's worth about $12.75 a share. With a 40 multiple, it's worth maybe $18 a share. And no one's going to be happy with those numbers. So what do we need to do to bring earnings to the table to justify a reasonable PE ratio? That's what I hope they're grappling with. Like, how do we do this? What can we buy? What can we invest in?
Sure, become a VC firm.
Become a VC firm. Yeah.
Hold on. Let me just look. What's the multiple on like something like Blackstone, which would be, I think it's like 3 or something. Like BlackRock, I think usually is around 3 for book value, right? Because then if you enter the world of finance, your metric then becomes book value, and right now you're at 2. So price to book. Oh yeah. Okay. So actually that's even better. Like something like Blackstone is 15, 16 times book value. But then to be fair though, you can't really do it this way because book value calculation. Okay. Let's just use BlackRock at 3 times book value because that's closer to right. With something like Blackstone, I forgot there's like a way that the numbers roll up where the book value is misstated. So that's but let's say 3. So then this is a 2. You have that upside spread if what he's going to do. I mean, it can be more than 3 for.
Would you look at book value in a case like that because it's a venture capital firm instead of looking at a PE ratio?
If my goal was to turn this thing into a venture capital firm, then I would be paying you for the cash, and then I would be paying you for whatever investments that were associated with the cash.
Okay.
So, and most of those investments would not be very profitable. So I would be trying to find alternative ways to value it, price to sales, blah, 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 blah.
Well, this is a fascinating discussion. Like, I don't know anybody else out there in the community that's like digging into this little, what if this is a possibility? So I'm glad you're bringing it up. Whether or not it ends up happening that way, it's still a great little sidebar discussion.
Yeah. I mean, like for me, whenever I'm listening to the company call, unless I don't like management, so the company calls, so my style of like commentary is to listen to the strategies that companies say and then like map it to the financial statements. And if there's a mismatch, then I might have some feelings one way or the other. But if there's any gaps, I tend to try to be nicer about it unless the gap is clearly showing that management is a bunch of jerks. You know what I mean? Here, I still want to believe that Ryan's not a jerk. So if I was like really rose-colored glasses, as nice as I can possibly be, that's what I would say. And there's a part of me that really wants to believe that because, he's an entrepreneur in background. He grew up in the VC world. So it's not like totally crazy that he really, you know what I mean? He knows lots of folks that are like that. He probably, as a human being, has an amazing network of people that would happily join him. And it is the case that not this part of gaming, but other parts of gaming do definitely have demand to try to fund a whole range of stuff within gaming, whether it's software that's then used to facilitate games like a Unity, or if it's something like individual games that they think will one day be blockbuster, whatever it is. So there is actually demand for capital in the particular way that, yeah, you got me.
that is my working thesis of what he's trying to do, May. And so I'm going to give him the benefit of the doubt. I'm going to be a believer in Ryan Cohen. I know that's going to make the GameStop haters really mad, and that's fine. You can not like Ryan Cohen, or you can,
between then and
it doesn't matter to me. You're not going to hurt my feelings, but I want to see a positive outcome for everybody. I'm not talking MOAS. I'm just talking like, how do we get a multiple higher than a $20 price?
Yeah.
How do we get it to $40? Where you can justify it. That's really all I'm trying to figure out.
Do we miss any questions? I'm looking through here. Let's see. Did Ryan used to hold earnings calls when he was, I don't know, because Chewy was outside of the area that I looked at. I looked at some of the financial statements a long time ago for Chewy, but otherwise not so much. I think Chewy now does do an earnings call, if I remember correctly, because I feel like I've listened to one. But it's a really good question. Gamer. Oh, wait. Is it Gamer with ESP? That's amazing. I love your tagline names. Let's see. What are some of the... Are there any questions that you're seeing?
One Stop Print Shop says, what if they bought Hasbro to acquire D&D and Magic the Gathering? I don't know much about Hasbro, so I can't comment.
Hasbro is doing its own transition as well. I'd have to really look at that's a good question. What I'm going to do is Hasbro is in the S&P 500. So next time I listen to earnings call in the next quarter, I'll kind of try to imagine what it might look like with GameStop. It's a really good question though, because they also have to massively transition their business. They do actually, have a pretty heavy or are attempting to desperately, however you want to call it, they are winding down the core business and trying to like do licensing of the gaming. So they make a lot off of the Monopoly game that they've licensed out to, I can't remember which gaming company they licensed it to. Don't worry. You guys probably all know in the background. So it's not the craziest thing.
Correct says they should get more into physical gaming, like D&D books, trading cards. They're now in trading cards, Corex. I don't know if you knew. Gaming events. I know at least one person, Corex, who is very against that idea just because you brought it up.
Oh.
But I mean, if you're going to go into trading cards, why not just take 3 feet of aisle space and dedicate it to physical gaming books? I mean, what is so bad about that? They're taking the gaming card industry on head on. I don't know if that physical gaming, the inventory you're talking about, is a growing business though. And there is a big push on to grow the trading card business, which is probably what GameStop's trying to hitch their wagon onto before it's too late. Unfortunately, I've talked to business owners, both web store based and brick and mortar in the trading card business, and they said, Tony, it's way more cutthroat than you can imagine. The profits aren't as fat as you can imagine or you would imagine, and you get stuck holding a bunch of inventory. If you don't have the right inventory, it can plummet in value right out from under you, because if you don't have the right cards at the right time, you just get stuck holding stale, declining price inventory. So maybe GameStop circumvented that by, only holding the 8, 9, and 10 rated cards. I don't know.
You don't know what hard cards they're holding.
Yeah, it's all online. It's all online, May. You can go look at their inventory.
When you said that, my mind went immediately to Ren fairs for some reason and like live events. I think that live events, it's interesting because one time I looked at what conference businesses sold at relative to what they cost. And the conference business, which obviously sounds like it has nothing to do with something like a Ren fair, but in fact, actually it quite does, because essentially the business is just selling tickets and then people attending and then you doing the marketing for the business. But the multiples that those things go out are actually pretty good, and the profitability, depending on how you're sourcing the location, can be out of control good as well. So that's not, I don't know if it was like gaming conferences or things like that, it's not a bad call if that is a direction that you want to go in, or if you wanted to buy a company that does that, also not a bad call.
I talked to some GameStop employees.
You probably don't need $4 billion for that.
I talked to some GameStop employees who tell me that GameStop plans on having a bigger presence at some of the trading card conventions. Did you know they have trading card conventions, May?
I want to go. That's so cool.
Yeah, there's a big one out in California. In fact, they just had one, I think, from the Burbank card shop. They put it on.
Yeah.
But, it'd be interesting to see. I like, just like AMC's getting into the merch and popcorn, I like that GameStop's getting into trading cards and trying new things. And that to me wouldn't that be an indicator that they're not trying to wind down the business if they're exploring new business models like trading cards?
I mean, it depends what they're doing exactly with it. You know what I mean? Because I don't know how much money that business needs, but that CapEx was really low.
Yeah, I ran the numbers of how much they
Yeah.
need to maintain that inventory. It's minuscule.
Yeah.
But how much money do you need to buy 4,000 cards?
Yeah.
Not a lot.
So, I mean, if they're,
It's not really a huge investment. It's
Yeah.
not even really a huge money maker.
yeah, I mean, so GameStop has its brand. GameStop has its clients and customers that you could figure out another way to sell something to them. I mean, if you told me that they were going to buy the trading card conference, I might be like, "Oh, that's really cool."
There you go.
Then that would be a little bit of a different spin. And if he wanted to buy things like that, I actually would be pretty positive on it.
Yeah.
You think actually there's more extension ability. Like I do think the idea, and I've heard a couple of different companies talk about it, but not always like first and foremost, but the idea of extending the virtual world into the real world, I don't think people have figured out how they want to do that yet. So if he did something like that, I would be thrilled. I don't think that takes $4.5 billion. So I think that's
now from hearing the conference, the guy that puts on the conference talk, he doesn't make any money doing it. It is for publicity for
he
him.
doesn't get marketing enough. Oh,
Yeah.
okay. So maybe that, yeah, I don't know. There are some conferences where people do really well. Like people pay up. It takes a while to get enough people and you have to like make sure that you have like someone there that everybody's going to come to see. But some conference businesses can be quite profitable.
Treetop says, what if GameStop just keeps diluting until they have enough money to buy a gaming company?
Oh my gosh.
I mean,
companies aren't really for sale so much. I mean, maybe like which one you mean?
The thing is, I mean, how long are shareholders going to tolerate that? That's really the question. There's going to be the hardcore part of them that's, oh yeah, bring it. We love dilution. I hear them say it every day on YouTube. Raise more money on me, Ryan. Sell more shares. I beg you. Sell all billion shares. And then I see a lot of people getting really pissed, even about 20 million. Like if Roaring Kitty goes on another tweet storm and you have a 200 million volume day, 20 million isn't going to even be noticed. They'll sell through that at a premium in a heartbeat. It's not even going to phase the price, I wouldn't think.
Yeah, I mean, like I said,
I don't know why people are so mad about 20 million shares. Other than it just seems egregious because they haven't communicated anything and they already have 4 billion. So why do you need another 500 million?
Okay, so that lends itself to what I was saying. Like if they're deciding to become a publicly funded private equity company, then that's amazing.
No. Don't you dare call Ryan Cohen a private equity company. Private equity is evil, remember?
Okay, what do we call him?
Let's call him a venture capital.
Sorry, venture company.
Yeah, let's use venture capital so nobody gets their feelings hurt.
Sorry, if he wants to be a publicly funded venture company, that's like the stuff of dreams. That capital's permanent. So it's great. So, okay. So like maybe I could define permanent capital as a word because sometimes it comes up and I see like these half definitions. So the other forms of capital, you have to pay back. That's all the debt side. That's what AMC is experiencing. Joy, right? And then there's like, if you're in money management, there's just raising assets like a BlackRock raises assets. They go and they ask for money and then you tell them you're going to give them X amount of money, but that money is not BlackRock's. They can all like literally get up and walk out the door tomorrow if they want to. The dream, the holy grail for all asset managers is permanent capital. And in fact, before like 2000, Well, I mean, some of them went public before the 1990s. Most asset managers were not public companies because they were like, wait a second, hold on, this is partner owned. We don't want to share our business. But then because of various things that happened, almost all of them came public. Goldman Sachs in 1999 came public. And that was a big deal because now you had permanent capital. And subsequently, all of the big private equity companies have slowly but surely become public companies so that they could have a core base of capital that they never have to give back and they don't have to pay interest on. So if he wants to dilute another 20 million because he has this beautiful asset, which is GameStop, the stock, which every now and then just like shoots up like crazy in price, therefore not just raising capital, but raising capital off of don't even worry about the valuation, then he should do it. He should always have a shelf available, and that shelf should always be as large as he thinks would make sense for the average daily volume.
Yep.
That's just brilliance. That's brilliance.
Yeah, I was looking back at the last few spikes. They were like 180 to 200 million shares in a day, and I was like, 20 million makes sense because that's 10% of a spiky day, right. And that would go unnoticed. It wouldn't piss people off, but it throws a shit ton of money extra in GameStop's bank. Maybe another $600-800 million.
Even Goldman Sachs should be envious. Okay, even BlackRock, Ken Griffith should be envious at that point. Okay, no one is like okay, like it's a really big deal that the stock does that and then he's able to capitalize it.
May, have you looked into or thought about at all like that $3 billion they raised in May and June? There's a raging debate in the community. Who bought those shares? We got the filings, the 13Fs, and didn't really see any institutions, drastically increase their share count. Not to soak up 120 million shares. So,
are there a lot of short sellers?
Do you think it was shorts covering, or do you think it was all retail? Do you have any thoughts?
Just probably shorts covering, I would think. I don't know. I don't have strong thoughts on it because the mechanism of these squeezes is so crazy. But I would suspect that if you if you were short, it squeezes. You got T+3. You know what I mean? Like maybe that would be how you did it. Not sure.
And if that was the case, I just want to say, I don't ever think that these guys are selling shares to help the shorts. They're just taking advantage of a manna from heaven. The price is trading at 5x.
It's like God
value. When you got no income, fuck, take the money.
$4 billion. Like, I really wish that, I think, the drama between the short sellers and the MOAS folks, I am there for it to listen to it a little bit, but for me, it is almost religious the way that man read. Do you know what I mean? Like in a million years, you have to think about all the people in New York that work in the marketing section of an asset manager and toil away conference after conference begging people for $4 billion. It's beautiful. It's actually beautiful.
Yeah, and Ryan just raises, $2 billion in a day. Yeah, that was easy.
It's beautiful. He didn't even have to okay. Another little thing I'll just say, what he's paying Jeffries to file this shelf is nothing compared to if he had to go do a road show and actually beg for the money from all these institutions. It's amazing. It's so much cheaper. Okay, those of you still learning, Goldman Sachs is going to report, okay, and everybody's so focused on the trading revenue, but it's going to come through the banking revenue, okay? Just look at that banking revenue and realize that Brian just sidestepped it. He's not a part of that bank. His revenue will actually be in the trading revenue section. It's so small relative to what the bankers would gouge you for if you were to do it a different way. It's beautiful. It's actually beautiful.
Sufyan says he has a question. Go ahead, Sufyan. What you got? I'm waiting for him to type. Let's see what Matt says. There's already been a lot of gaming studios that have closed down. He's commenting on Jim, and I agree with that, Jim. Gaming companies are kind of like nightclubs, right? They're popular for a while, and then they stumble.
Tough business.
They have too many projects going, and they just kind of implode.
It's a really tough business, and then the tech changes and upgrades so fast these days. Being organic.
Oh boy, Sufyan.
He's like, we need you to talk about AMC.
Oh boy.
They're different. It'd be like, would you choose an LV bag, or would you choose a Tesla?
Do you like grape jelly or strawberry jam?
I want them both, but a really, really good price because I'm cheap about it. All right. So
that's what I like about you, May. You're cheap.
Yeah, exactly. With my LV bag, right? Like, so I like a good discount. What can I say? I'm still a value investor at heart. Sophie, I know that doesn't give you much, but just
nice step, May. Try again, Sufyan. He's trying to stir up some trouble.
I just manage your size on these because they will be volatile. Do I think that the shelf is there because Ryan thinks there might be another MOAS and just wants to have that as an option? He could potentially never do anything with the shelf. Yeah, that is an actual truism. But given the history of these meme stocks, every company that has had that situation should have a shelf sitting
always ready.
Always.
Yep.
Yeah, and then they should monitor volume spikes and really do that calculation on the regular. Because
maybe you can help me because I know the process, but I don't know the timing. If they had, they have a prospectus now for 20 million. They had the shelf. If GameStop if they didn't do the prospectus yesterday, and GameStop were to start running up to $50 tomorrow morning, how long would it take them to get the prospectus done? Do you know? If they have a shelf,
yeah,
but they still need to notify shareholders, hey, we're going to intend to sell 20 or 50 or 100 million shares under this shelf. You got to have a prospectus, right?
Yeah. Didn't that happen to AMC though in this last meme run? They had to refile a prospectus.
No, it happened to GameStop. They got their prospectus out after it was already coming down the first time.
That's right. Yeah.
The second time they were ready.
Yeah. I think it does take at least, I don't know the answer. I don't know the answer. I'm sorry.
All right, that's fine. I was curious. I'm guessing based on GameStop's initial reaction, it takes a couple days.
Well, I know you have to file it. I think it's probably more filing. The bankers will have it ready like in 2 seconds. They have people that don't get to sleep at night.
Yeah, I was thinking like you're working overnight.
but
that shit up.
Yeah, exactly. So it's whatever the filing situation is.
All right, fair enough. Guys, any other questions? Because I don't want to keep May here all night, and I want y'all to go watch my GameStop video before it gets too late. The one that I uploaded at 7:30. And I haven't eaten yet today since 11 o'clock. I had a ribeye at 11, but it's 9 o'clock here now. So I'm starting to get hungry.
All right.
Final questions. We got 2 minutes, May. 2 minutes for final questions. You got any on your end that I can't see?
I'm just scrolling down like crazy. Let's see. Ooh. Well, that angry people. SoftBank has a PE of... Okay, guys, some of these are a little funny, but like... a lot of people just asking kind of what valuations you would get on if it turned into a financial company. It's really hard to say, guys, because it would be young and it would depend on some sort of proven, like you'd need the first few deals to come out before you get a real pop in valuation. GameStop has so much cash. Why did the price drop? I'm
going to say to you, Marco, I just put out a video answering that very question. Going over GameStop's Q2 earnings, and you want to go to the end of that video and watch the part of the video where I talk about how to value the price of a stock. There's multiple layers here going on with GameStop. They had a 30% reduction in revenue. Falling revenue is not going to be looked at favorably. We know they're cutting stores, right? So we expect revenue to fall, but you can't call this a turnaround story. I don't care What metrics are getting better? Oh, the inventory turnaround improved. Who the fuck cares? You're in a declining business, and that is just not going to be favorable. So declining revenue, not operationally profitable, and cash on the balance sheet earning 4 or 5% is not really worth someone paying 2x that cash. I could take my same investment and go buy treasuries for the same return risk-free. So, and then on top of all of that, they announced dilution. So there's multiple things. I'm not criticizing GameStop. I'm just trying to help y'all understand why the price is falling. And that was that video that I just put out. There's a lot of people that are narrowly trying to focus you guys on, look at all this cash on the balance sheet. My opinion is cash on the balance sheet is irrelevant unless the market cap is under the book value. Then it becomes more interesting. Otherwise, book value doesn't really matter. Earnings matters. Income matters. And even with making $14 million, that's not worth a $23 price. 14 million on a quarter. You could do that 4 times and it'd be a $12 stock.
This is a pure play Ryan Cohen story right now.
The whole gamble, the price is a gamble on Ryan doing something with the money.
Yeah.
Money sitting there is useless to all of us as shareholders.
Yeah.
It's useless to a $23 price. It's certainly not worth a $30 or $40 price until he does something with it. The day that news drops, if you were betting on Ryan Cohen, you could be happy.
You could be happy, or people could freak out first, be very confused, and then maybe happiness comes after.
Yeah, or you could be disappointed. We just don't know what he's going to do. We don't know. That's why I can't tell you what a reasonable, I can't tell you if GameStop's a great investment. It's a reasonable gamble if you're a speculator, and if you're willing, you say, all right, I got this money, and whatever happens, I don't care.
Yeah,
I'm so tired of, it hurts my feelings to hear people say, I put $100,000 into this company and I just lost 80% of it. You knew it was a speculative play. Why did you put all of your life savings in it? Like, just understand the risk. And if you say, got it, Tony, GameStop, speculative, I could lose half of it, or I could double my money. I'm good with that. Whatever I spent, I'm good with it. And I won't blame anyone. I made the choice. Then do whatever you want.
Yeah. I wish that they would, on some of these stocks, have a little disclosure. This is not a massive amount of my wealth, or I'm prepared to lose every cent of this. I don't think that, the company's not in debt or anything like that. So I don't.
Yeah, there's no bankruptcy thesis with GameStop.
So you could technically just be like, all right, 4.5 billion in cash. Market cap is 9 billion. The core business is probably worth something more than that. So 5.5 billion. Like, like you could do something like that, and your guess is as good as mine, because
I think that's how the analysts are doing it now. I mean, they got a updated price target from Wedbush today of $10, and that's right at book. I think that's low. $10 is low. I'd give it a little more than that, but just strictly on traditional financial analysis, because analysts aren't betting on Ryan Cohen, guys. They're looking at ratios. They're doing calculations. They don't care about you believe in Ryan Cohen. So don't get mad at them. They were trained a certain way to do something, and that's the traditional way to do it.
Sufyan thinks they're going bankrupt in the midterm. How, though? They don't have any debt. I was watching Black Hudge, and
Sufyan says, I would debate you that organically GameStop's going bankrupt. Impossible, Sufyan. They have $4 billion.
Yeah.
And I mean, they could close all of their locations, Sufyan, and just make $150 million a year off of interest.
Off the interest.
There's no bankruptcy.
Yeah, this doesn't have bankruptcy risk. I'm not sure. I'm not sure why that that one probably, there may be some rumors, there may be some people that are really focused on that. That shouldn't be a focus at all. This thing,
I got to be careful debating Sufyan because he is a CPA and I'm not. But tell us some more, Sufyan.
yeah.
Tell us,
I think the
expand.
floor should be at least the cash, which I think is what other folks
Yeah.
are. Yeah.
Your bottom seems like your safe price. You should be able to get out at least for $10.
Yeah. So for me, the thing that would make that a little bit hard to be like, I'm with you, Sufyan, is that they're still buying new inventory, which tells you that there is some actual sales happening. So it's not like, oh, this inventory is being sold at a massive discount. Life sucks. The world sucks. Right.
No, their margins are improving.
Yeah. So it's hard for me to be like, I totally see what you're seeing. This thing has an issue because all of so if we go back to the balance sheet, the way that I think about it, maybe this is not the right way to think about it. Maybe this is not how others think about it, is that a lot of times people always focus on who's in line here. But I also like to think about it, if your concern is bankruptcy, what can you get rid of here in order, right? So cash, obviously, you'd have to burn through all of that. And then you still have, the inventory, which is 560 million, and then so on and so forth. You have no issue between current assets and current liabilities. And that's it, the 1.5, right? So even current assets could take care of the 1.15. That's how I think of balance sheet, is I think of the asset liquidity along with the liability liquidity. I've noticed that a lot of times when people are focused on this, they only look at the liability liquidity and they're like, you're in line this way. And I'm like, no, the next thing that has to happen strategically is you start running down, and you either have, so like for something like AMC, you're going to have to go, since the current assets are less than the current liabilities, or have been this quarter, probably will get lucky, not especially with all the things that happen. But what bankruptcy doesn't mean total liquidation. However, what if they burn all their cash 5 to 10 years from now and need
5 to 10 years, or maybe another story, but I don't think Ryan Cohen's going to do nothing for 5 years.
I think even more than that, they won't have as many stores in 5 years. And so if, even if you're optimizing, so let's say you take an L on every single store. What do you have left at this point? I mean, your revenues were down by 30%, but you somehow still ended up profitable, which is not even the case in the past. And then your inventories are down 18%, which I am reading, if your revenues are down 30%, that you got rid of a lot of stores is really what it is, So, I mean, Sufyan, you've been looking at this for a lot longer, so I don't want to, go in the weird direction with it. But I would say that if it turns out that the amount of stores he got rid of was really, really small, but we see like this massive drop in revenue and not in this weird drop in inventory, then all day long, I think you've got a really strong argument. But if the amount of stores if instead it looks more like the way that we've been talking about it, which is you have this really big exodus of stores that's greater than 20, let's call it, then I think it makes it really hard for the company to go bankrupt.
I mean, even in their worst year in 2021, just looking back at recent history, the net loss for the year was $381 million. It'd still take them 10 years to lose $4 billion.
It's a lot of dollars.
I just don't see it, Sufyan. And I'm sure no one that's in GameStop, or maybe only one person, is planning on owning GameStop 10 years from now. So something's going to happen long before that, I think. Robert says, could GameStop offer dividends to shareholders? I'm curious to hear May thoughts, but I talked about it on my video that I just posted 2 hours ago. And my answer was, could they issue a dividend? Sure. But to me, just stepping back, not being a person to tell you, I want a dividend to cause a short squeeze, because I don't really believe in that. I just look at it like dividends should be paid from excess earnings. GameStop's raising cash. Dividend would be spending cash. And so the two don't line up to me. Like, why would you raise cash just to return value to shareholders? And what value are you returning when you don't have excess earnings? It doesn't make sense to me unless you're just trying to pander to retail. He doesn't really seem interested in pandering to retail because he's diluting them. So I say no I don't expect a dividend, but it is possible. And May, over to you.
I also say no, and I agree with everything that you're saying. And I would add the following: you don't want him to return the cash. Your cash, hanging out in GameStop, is worth 2x. If he returns the cash to you, it's worth 1x, right?
Yeah, let's make that clear. Like the cash right now is let's just call it the book value. Your cash, when GameStop's holding it, is only worth $10 a share, but your share price right now is 20.
Yeah.
That's what May's saying. Your cash is worth 2x just sitting there at GameStop. If he paid it back to you, he's depleting the cash of the company that you're currently enjoying a 2x valuation on.
That's what makes what he's doing on these MOASs magical. It's like magical.
I want to encourage you guys to get out of this mindset that a dividend is necessary to squeeze the shorts. What's going to squeeze the shorts, if there's any remaining after he raises $4, $5, $6 billion, is what's going to get rid of them is the same thing that's going to get rid of them at AMC: earnings, doing something with the money.
I can't wait to see what he does, to be fair. Like, there's a part of me, first of all, I very clearly, if it's not clear, I have nothing but respect for anyone who can raise capital this way. And number two, like, I'm so curious. He's a smart guy, right? Like, he exited his business like a champ. So I'm so curious what he comes up with, really.
Yeah. And Korak says, I think of it as like a growth company, right? Growth companies don't typically pay dividends because they need to keep that cash and invest it in the business to provide you a future greater return. And that's ostensibly, theoretically, hopefully, what Ryan is doing. He's accumulating all this cash to do something beautiful for you, to transform it through an acquisition or an investment. And so just handing it back to you when he just got it from you, to me, doesn't make logical finance sense. I get it from retail trader mindset, but I want to encourage you guys to step out of that and try and think like a finance guy.
Yeah. I mean, okay. So this, the argument for dividend is that brokers are not holding accurate. Okay. So let's talk about like why someone would do it if they were purely just trying to create the short squeeze, depending on how he's trying to do it. Oh, did I lose you?
What did I do?
So if you could technically just create a dividend, some kind of cash burn, if you were only trying to squeeze the stock. I don't know how big the dividend would have to be to make it really ugly. But it is a legit way. If he's going to do that, I would suggest he does a special dividend, so it's not every quarter. And since he's got the shelf offering, it's not the worst idea if you were to say, okay, so I will give some fairness to that. So let's say he's got this team of people, and what they've really decided is that they're really great at raising capital and magically adding a multiple to it. Not insignificant, okay? And he just like hired literally a team of people to constantly squeeze the shorts. Then I think market mechanics is not my thing, but I think technically he could issue a special dividend and force the shorts out because they would have to pay it.
But here's the thing, May. The people that are really advocates of this dividend theory don't think that the short interest is 10%. They think that the reported short interest is incorrect. It's a lie. It's not really being reported correctly, and that the short interest is 100x multiple of the reported short interest. So therefore, whatever dividend he does, whether it's a warrant or 10 cents or 50 cents, it's going to flush out all of these hidden naked shorts.
Yeah.
That's the theory.
I mean, there's definitely derivative instruments on GameStop, but what you could do, so like if I was like, I'm going to entertain this all the way to the bitter very end, it's not like, this is not a zero thought. I will say that, but if you were going to do it, you'd want a little bit more evidence that it was necessarily going to create a MOAS. And then you would basically sell every single share in that shelf if you could, but you'd need like very high short interest to happen. And then if you then issued a special and then at the same time toss the shelf, then that would be, how clever that would be? That would be so amazingly clever, because basically you would be paying out the dividend, but then taking in the MOAS money. And then all day long, he should just do that.
I mean, that's one thing they're saying. Like that's what they're saying. He's raised all this money. He could return it to us in the form of a dividend and cause the MOAS and sell more shares. I mean, I get it. It would be genius if it worked.
You gotta, if it doesn't work, then it's just a reduction in capital and it sucks. So I think you would really need, so you've got at least the chessboard is set up correctly, right? So the chessboard is set up where you have the shelf offering, very nice. You've got plenty of capital, so it won't even bother your operation, whatever it is you have actually planned. And then again, personal preference, special, not like a quarterly dividend. Okay, do a special.
Why special?
So that it's only a one-time thing, and so then it keeps like the shorts a little guessing as far as they're good. But it would affect the entire options chain if it's a large enough dividend. But you really, 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 like you even though there's all these feelings that people have, it can't be a feeling. At that point, you really have to see the short interest go past a certain point to feel confident that you could squeeze them like hardcore. I think that's how it works. There may be other.
I mean, if it happened, I'd just pop a cold one, sit back that day, and watch what happens. But I'm not ever going to be a channel that's set pounding the table like, Ryan's planning a warrant. He's planning a warrant distribution to shareholders to squeeze the shorts, or he's planning a dividend. That's not like the thesis of my channel. Yeah. If it happens, cool. Like we'll just see what happens. I don't care if he does it or not.
It's kind of like betting on 000. Some people who play the like roulette, they're like, you know what? We're just gonna put one chip on 000 just in case. It's like that. That's what it is.
I'll have a few shares just in case, but I'm not going to be the channel pounding the table that if he just needs to do a dividend. There's plenty of other people pushing that, and I'm just gonna tell you the logical reason why he's probably not going to. But if he does it, don't matter to me. Don't matter to me at all.
Yeah.
It'd be interesting to see. Maybe we'll finally put this great dividend theory to bed once and for all. Remember when the 3-for-1 or 4-for-1 stock split was supposed to cause a squeeze too, and all the price did was plummet. If you pay a dividend, and it doesn't work, the price is going to go down. You know that.
Straight down at that
you guys know that, right? When he pays a dividend, that's going to reduce the price.
Yeah. That's why the only way that it becomes
of the stock
intriguing. Well, it's Sparky. Hey, would that be considered manipulation to issue a dividend just so the stock spikes and then dump the shares? I don't know the answer to that, Sparky, because there's nothing that would be illegal in doing that. That's like nothing is like because like if you already have the shelf filed at some random date in the past where like it had and you have a use of proceeds that doesn't involve the words "I'm just here for the shorts." You know what I mean? And then so the shelf is just hanging out. The broker has their instructions at a time that that has nothing to do with your dividend at all. It's okay. It's okay, Sparky. It's not naive. It's a great question because then anyone with it's. I don't know how you would. I don't know how you would really pursue it if first of all, you're a short seller, which the SEC doesn't really help the short sellers except in the weird mechanics of how the market currently exists. So I don't know if even as a short seller you could sue the company. So then who would you go to? That's a legal question, not my background.
Just the company needs to not say we're doing this to squeeze the shorts. They're just like, hey, we got $4 billion. We want to return some of that money because we're so benevolent. And here's $1 a share.
That's a good thing. Yeah. So, totally. Right. Okay. So like that.
May, what if the $20 million shares is to raise $465 million so they could issue a $1 special dividend?
I mean,
what if, May? I mean,
well, it's not in the document, right? So there'd be nothing, But technically, I don't think it's impossible, and I would think it would be fascinating if it happens to watch it happen. I think I'll be giggling the entire time because I probably can't help myself at that point. But because it would happen at different times, and in such a case, it would be the case that you gave like I don't know what. Let's say they did a dividend and it cost them like $10 million. But if the stock, if it's enough.
No, I'm saying it cost them, what if they did a $1 per share dividend? So it cost them $485 million.
Okay. But then if the stock like doubles or something, you clearly raised more than that. So it would be the one time that the value of the company doesn't go down because the dividend.
Yeah. I mean, if any stock could do that, it would be GameStop.
Yeah.
Even if there were no shorts, I mean, just the thought, or 10% short, still you could have a nice little run up. I mean, I don't know.
I want to see him do it and test it, and then
let's do it. All right, let's do it. You guys convince me.
You guys now for the first time, the MOAS people, I am completely.
Let's do it.
And I'm sold because I just need to watch the mechanics on this. I just want to watch the mechanics, right? Like I need to understand these mechanics for myself. Thank you guys. I love you guys.
Evan says Larry Chang had a good tweet this week. What other CEOs taking no pay, no doc, no stock? Yeah, I mean Ryan is essentially working for free, other than the very cheap shares that he has. He's got a very good capital appreciation on those. I don't know many. I've spent maybe 5 minutes looking to see how many other CEOs are working completely for free. It's a very short list. It might only be one person. And that is another reason why I'm going to give Ryan Cohen the benefit of the doubt, even though some people hate him. I'm not one of those guys.
Yeah. Gosh, you guys, you know what? I'm sold on this dividend now. I am now pro-dividend. I'm now pro-dividend. Sorry, new caveat. You'll make another video. All of us need to try more on content. It's fine.
I'm going to say I'd be fine with trying it, but I'm not going to go on the record saying that I expect them to do it. Is that fair?
I think that's fair. I don't know how management thinks versus like how all of us that just want to see it done to think.
I understand why everybody wants it done, and I'm right there with you. But like, if I'm sitting in the boardroom, I'm probably like, no, we're not spending $400 million on a dividend.
I want to see it so bad, though. I think it'll be so cool. Sorry, I think it's amazing. Like, it's an amazing concept.
Sparky wants to see it.
I know.
Let's do it, Sparky. Everybody write a letter.
Yeah. Actually,
Larry, win dividend.
I wonder how big the dividend, I mean, like, if you could really raise that much, because the squeezes are almost a double, right? So like, or in some cases even more than that. Like, it would actually be worthwhile to have a team to like really calculate exactly what that dividend would have to be. Like, so the least amount of capital to deploy to create this. But you really have to have this extreme certainty that the shorts would be forced. Like, and then you've got to sustain it for a few days, right? So you're probably going to have to apply a little bit of capital to like, so you do dividend plus stock buyback to force a certain type of behavior already. And a dividend plus a stock buyback would not, in and of itself, it would not be manipulative from the company's perspective, because plenty of companies do both a buyback and stock, So as long as those things are like separated from each other.
You just need to, Ryan, keep your mouth shut. Yeah. Don't talk about short squeezes. None of that shit.
Yeah, and executing off a program, so it's not even like you can do. You know what I mean?
Just say you're returning shareholder value. We want to honor our longtime investors.
Pass. We've thought about it. What we needed the capital for is no longer. We're going to return it right back to shareholders. There's no. Like, I'm not a lawyer, and I would really like to talk to one. If you are one, write it in. You know what I mean? But
the downside is limited, May. If they paid out $1 special dividend, the stock price goes down $1. There's a limited downside. They've got $4 billion in cash. If they raise another 450,
it makes sense to do it.
Yeah, let's try it. Let's do it. I'm on board. Let's do it.
All right, the dividend GameStop people, you've won me over. Thank you.
Sparky says tomorrow on a variety of YouTube channels. Tony Denaro says GameStop to issue $5 dividend. No.
Oh my gosh, we got some people. I'll connect my legal team. It's amazing. You guys are amazing.
All right. My wife just got home from yoga and I need to eat. And what time? I think I said at I think I said at 9 o'clock we were ending, and now it's 9:24.
Oh, we started late. It's okay.
No, I love these chats. I think we covered some good theory that you have about what was it? The reverse merger theory. I'm gonna read up on that because I'm no expert on reverse mergers. I know you are, me, because you spotted something that none of us were talking about. We don't know if that's going to happen or not, but it's just like one more thing to add into the bag of the grab bag. What's going to happen with all this money? What's Ryan setting this company up for? There's a lot of potential outcomes. Thank you for adding one more bean into the grab bag.
I'm so curious. I can't wait to see what he does. It's really interesting.
I'm going to close by saying, again, if you're just joining in, I don't hate GameStop. Anybody who's telling you that, it's because they don't want you to watch my channel, because I just provide financial analysis without all the hopium, and they don't like that. I bought GameStop today at 1950, so my basis is 1950. That is definitely not a buy recommendation for you, because I see some potential downside depending on what happens with the PPI and the Fed meeting. And so if it goes lower, I'd prefer to buy there. But I did pick up a little bit today. So that's where I'm at.
I have nothing.
And the vast majority of my portfolio is blue chips, like 90%. I keep my risk managed. My meme stock gambling speculative money is not my portfolio. It's a portion. And I encourage you guys to learn some risk management after the MOAS, of course.
Exactly. After the MOAS, guys. All right. We'll call it.
Thank you, guys. Have a good night. We love you. May, thank you for your time. Sparky, nice of you to stop in. Korak, same to you. Anya, if you're still here over on May's channel, thank you. Bye. Everybody in the chat, we love you. Have a good night. Bye. Let me find the outro here.
Yeah, okay.
All right, here we go.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back.